Good afternoon, everyone, and welcome to the Daily Volatility Box Report for October 14th, 2019. We are TOSindicators.com, home of the Volatility Box. Trading with the Volatility Box today, we had absolutely no entries. I'm sure most of you probably noticed this. We just moved in a fairly narrow channel, just sideways for much of the day, not remotely close to either of our edges. Since there are no Volatility Box entries to discuss today, we'll instead spend some time looking at some stocks with upcoming earnings tomorrow, actually, and we'll apply the Smarter Earnings tool to analyze the earnings day and see if there's anything that we can take out from there and maybe some trade opportunities. All right, and for tomorrow, if we take a look at our Forex Factory calendar, we see once again no really big scheduled events on the calendar, and so we'll do what we had continued to do today, which is we used our first hour test to determine which volatility box we would use, either the aggressive or the conservative. All right, so now let's look at charts, and on the left-hand side here, you'll see that we have a column with our tickers. I'm sorry if a little bit is cut off, but in order, we'll start and just go straight down the line. And on my actual chart screen here, I have three indicators plotted. I have the simple break, actually four indicators. So we have the simple breakout tool just in case there's a breakout that's coming up. There's the market pulse tool. There's the actual smarter earnings tool, which is what we'll be using as our filter. And then there's the V-score just in case we wanted to plan any of our trades. And this is the setup that we'll be looking at to very quickly go through this entire list of tickers and try and narrow it down to where we might want to focus in terms of diving deeper and seeing if there's any earnings related patterns. All right, so if we click OK, and then the chart we'll use is a 2-year one-day chart or a 2-year daily chart. And this way we have just enough data, but 3 years, in my opinion, is just a little overkill, and 1 year is not enough data, and so 2 is a nice sweet spot. What we'll notice is the number of earnings will be either 7 or 8, the total number. And so just going down the line for the labels, the first label is our market pulse, which tells us the overall trend. But what I'm really looking at first will be the total number of earnings, and I want to see if either the total number of gap fills or the total number of gap and goes is basically at least 50% or more. So this number should be 4 or more for us to get excited and then call out that ticker to then spend some time diving deeper and just taking a look at patterns and seeing if there's anything that is a tendency in something that the specific ticker tends to do. And so just going down Schwab, we'll use that same check. We see this is 2, so it doesn't pass that condition, and we see gap and go is 2. And so for us, not really something in our quick check that we're interested in to trade the actual earnings day of. And so going straight down the line, Goldman Sachs, we see 5 gap fills, so this passes the condition, and then 2 gaps and goes. And so we'll add Goldman Sachs to come back and do a deeper dive to. JP Morgan, 3 and 1. So 3 and 1, and so it doesn't pass our conditions. Moving straight down. So Citi, same thing, 2 and 0, so it doesn't meet our condition. Wells Fargo, we see 2 and 0, so it doesn't meet our conditions. BLK, 2 and 3, close but not enough. UAL, 1 and 6, so UAL meets our conditions, but from the gap and go. And so far we have Goldman Sachs and UAL in our scan that we're going to take a deeper dive in. Next, J&J, 2 and 3, so not enough. And then finally, UNH, 2 and 5. And so this also passes our scan. And so really for us, we have UNH, UAL, and Goldman Sachs that we're going to spend a little bit more time just diving deeper into and studying the patterns of. And so now we can close the sidebar. And if we take a look at the Goldman Sachs pattern, the one that tends to happen more often than not is gap fills. And of the gap fills, it's a gap up. And I modified the indicator just a little bit so that we can also see if it's on a miss or a beat. And we see that we have 5 gap up fills. So essentially this is to say we've gapped above yesterday's high, or so in this case, today's high. So our open would be above this price. And it happens on an actual beat. And so we gap up on a beat, and what this indicator is saying is that we tend to fill that gap. Now, if we actually go back and look at Goldman Sachs, what we'll also notice is that most of the gaps are minimal to say the least, right? And so for us to be able to play this move and have any kind of edge, we need to gap up a decent percentage to where we actually have room for that fill to be worth anything in terms of dollars, either if you're playing directly Goldman Sachs in terms of shorting it, or buying a put and looking for that reversal for that gap fill. But the strategy we're looking for on a Goldman Sachs is if we have a gap up, then I'm looking for that gap up to be filled. And hopefully that gap up is on a beat according to patterns. And if it's on a miss, that's fine too, because the miss makes logical sense. But the beat, you should still have confidence with, because you see that we still have a tendency to fill that gap up even on that beat. So again, if we gap up on Goldman Sachs, then I'm looking for that gap to be filled. But again, that gap has to be sizable to make this move worth playing. Not something like 0.3, 0.5%. That's not really all that exciting. All right, our next ticker that we're taking a look at is United Airlines. And so with United Airlines, we see that the tendency that we're looking at more often than not is a gap and go. And of those, 4 out of the 6 have been bullish, and 3 out of those 4 have been on beats. And 2 out of the 6 have been on bearishes, but both of those have been on beats. And so really what this is telling me is if 6 out of 8 of our total earnings are gap and goes, then more times than not, whenever we gap, we're likely to be trending in that direction. And so that's what I'm looking at for UAL. I'm looking for continuation of the actual gap if there's a gap in one direction or the other. And so for that to be true, UAL needs to open either above our high from today or below our low from today. And then we'll be looking for a continuation in that same direction. And that's the pattern on UAL. And the fact that we're in an accumulation mode sort of favors the fact that if we get that bullish gap up, then the earnings could be a catalyst that then pushes us higher. So that could be something interesting that we're looking at. But really, UAL, that's what the move is. You're looking to play the direction of the gap. And then finally, we'll take a look at UNH. And so with UNH, the pattern that we have more often than not is the gap and go. And in the gap and go specifically, we have 4 out of our 5 gap and goes being on earnings beats. And so really this is to say 4 out of 8 earnings in the past have been a gap up. And then we've continued to go in that direction for an average of $4.23, especially if we tended to beat on that earnings. And so while we're in a deceleration phase, that is an interesting pattern that I might be looking at, which might cause us to, say, switch on over from the deceleration to the distribution phase, right? With this move up, that might turn this line into gray and foreshadow maybe a future distribution phase. But really, our job isn't to predict, it's to just look at the patterns and the tendencies. And that's the pattern that we have here. It's if we tend to gap up, and that too on an earnings beat, then more times than not, we tend to continue in that direction, and we see on average we'll get about $4.23. And so that would be the move that we're looking for in UNH. And so hopefully covering all of these tickers helps to give you an idea of how to use the Smarter Earnings tool in conjunction with some of the other free tools that at least we have out there to start to develop a game plan, just run a quick analysis of the day of earnings and find plenty of trade opportunities, right? Because at this point you have 3 very specific conditions that you're looking to be true on 3 very specific tickers, and wherever that condition tends to be true is where your focus will be. But you've made sure to already narrow down your list to have focus to start off with. Instead of having, say, 15 or 20 different tickers you're looking at, it's really just 3. And then you have very specific patterns that you're looking for on those 3 tickers to see if they come true. And if they come true, then you're playing the probabilities that have happened for the past 2 years. All right, so once again, no trades today using the volatility box, 0 across the board. And so instead, we spent some time looking at earnings, and hopefully the game plan for Goldman Sachs, United Airlines, and UNH helps you in terms of trading the actual day of earnings or after we have that data, and hopefully sets you up for success. All right, good luck trading, everyone, and we'll see you in tomorrow's nightly update.